Have you ever swiped your debit card for a simple $5 cup of coffee, only to discover your bank account was charged $40? That minor transaction went through perfectly at the register, but your banking app later reveals a sudden, massive penalty fee. Because your balance was just $4.50, you were short by a mere 50 cents, yet the system allowed the purchase to pass. The institution framed this transaction as a helpful protective service, but they actually used your minor oversight to generate a massive profit. This is not a simple glitch, but a highly engineered systemic revenue loop designed by financial institutions to quietly extract your wealth. They market this default setting as a financial safety net, saving you from the public embarrassment of a declined card. In reality, this automatic system behaves exactly like a silent financial virus, quietly draining your checking account without your knowledge. A single minor transaction can trigger a compounding domino effect of successive penalties, accumulating hundreds of dollars in fees in one day. In the next few minutes, we will expose the exact behavioral algorithms banks use to keep this automated drain active. More importantly, we will show you the precise, immediate steps to permanently disable this systemic loop and protect your cash. To understand why this system remains so incredibly profitable, we must analyze a core behavioral economics metric known as present bias. Human beings are neurologically wired to prioritize immediate rewards and avoid immediate discomfort over long-term logical consequences. In a retail setting, the immediate discomfort is social friction, specifically the momentary shame of having your payment card declined. Financial institutions understand this psychological vulnerability perfectly and design their automated systems to exploit this subconscious fear. By automatically opting your account into standard coverage, the system completely eliminates this immediate friction at the register. You receive your purchase instantly, but the systemic financial blow is strategically delayed to disconnect the pain from the transaction. The entire system operates as an asymmetric fee barrier, allowing you to pass freely but demanding a massive toll to exit. When a bank automates this process, they rely heavily on default bias, knowing the vast majority of consumers accept factory settings. The institution configures the default setting of your checking account to auto-approve high-fee transactions rather than declining them instantly. Furthermore, they reduce cognitive friction by strategically delaying your account balance alerts, preventing you from realizing you are overdrawn. Instead of warning you immediately, the system allows you to proceed with consecutive small purchases, treating each as a separate transaction. Because your account balance is processed at the end of the business day, the system applies a separate $35 penalty to each transaction. If you want to stop letting systemic financial algorithms quietly dictate the flow of your hard-earned money, you need to upgrade your defense. We expose these hidden wealth-draining mechanisms every single week to give you absolute, undeniable control over your assets. Take a second to hit that subscribe button right now and join a global community of consumers refusing to pay passive banking taxes. To witness the immense wealth divergence caused by this automated mechanism, let us analyze two average American households over 12 months. Household A leaves their checking account entirely on the default factory settings, believing this service is a valuable emergency tool. Throughout the year, they experience minor common cash flow gaps before payday, triggering transaction deficits over everyday purchases. Because of consecutive end-of-day transaction processing, Household A triggers an average of just 2 hidden fees every single month. Household B, however, takes exactly 5 minutes to fully optimize their account settings, choosing to opt out of coverage entirely. When they hit the exact same cash flow gaps, their debit card is simply declined at the register with zero financial penalty. They experience 5 seconds of minor social awkwardness, pay with an alternative credit card, or simply cancel the minor transaction. Let us compare the direct household annual financial impact to see the shocking reality of these two opposite approaches. As the data clearly demonstrates, Household A pays an annual passive banking tax of $840 for minor retail conveniences. if that leaked capital were instead redirected into a simple index fund compounding at 8%, the opportunity cost skyrockets. Over a 10-year horizon, Household B accumulates $12,168 in compound wealth, while Household A experiences a complete loss of that asset. By accepting a tiny moment of immediate retail friction, Household B completely immunizes their wealth from this systemic drain. To reclaim absolute sovereignty over your checking ledger, you must immediately implement the systematic bank friction self-recovery protocol. Under federal compliance laws, financial institutions are legally prohibited from charging transaction fees on debit purchases, unless you explicitly opt in. If you previously clicked yes to standard banking terms, you retain the full legal right to revoke that consent at any time. We have designed 3 direct actions you must execute tomorrow morning to secure your account and seal this cash leak. First, open your banking app, locate the Overdraft Services tab, and immediately select the opt-out option to decline coverage. This simple adjustment forces the system to decline your card if funds are insufficient, blocking the bank from applying any penalty. By disabling this auto-approval mechanism, you completely neutralize the asymmetric fee barrier, converting a $35 penalty into a $0 event. Second, configure an automated balance threshold alert via SMS or push notification set precisely at a limit of $100. This custom setting operates as an early warning system, notifying you before your balance approaches the high-danger zero margin. Third, link your checking account to a secondary free savings account and activate the automated overdraft transfer setting. If a deficit occurs, the system automatically pulls the exact difference from your savings for a flat transfer fee of $0. This setup acts as a permanent micro-savings shield, completely bypassing the bank's calculated overdraft fee barrier at no cost. Stop paying passive taxes on your own hard-earned money. Optimize your digital ledger settings and take back control of your financial destiny today.